Welcome back. You're watching the BMR Budget Big Picture here on CNBC TV 18. We're counting down to the Union Budget, which will be presented by Finance Minister Arun Jaitley on the 1st of February. Just before the break, we were talking about where is the money going to come from. You know, the government has been betting big, specifically the Finance Minister talking about the tax buoyancy that we're seeing. Do you see that playing out, Mukesh?
So the money will come largely from increased compliances on the personal tax side. I am not very optimistic of any material double-digit increase on corporate tax collection. The money could come if GST becomes a reality in the 3 quarters that the GST will be there. So I'm hoping that the government's share of GST revenues will go up. But I think the real challenge would be on the fiscal deficit target. You know, what is it? Is he going to stick to 3% or is he going to kind of take some liberty because of the band flexibility that he has now. Having said that, please bear in mind that this year's collection is largely attributable to excise duties and service tax, 43% and 23% respectively. That's largely because of the ad valorem duties on petroleum products, which comprises almost 50% of the basket for indirect tax. I'm not very sure whether this, because of the base effect, and second, because of any rise in petroleum prices where the government will be constrained to not increase or put the benefit, pass on the price rise to the customers, whether there'll be similar increase of excise duty and service tax in the next year. So I think that is where I see some degree of stress on the revenue side of the budget. Okay,
that's why you see stress on the revenue side. Nana, you know, since we're talking about themes, rural revival is likely to be one big theme of this budget as well. If you look at the manifestos of the state elections, the BJP's UP manifestos promised loan waivers for small and marginal farmers. In Punjab, we're seeing manifestos talk about exactly the same. Of course, the higher NREGS allocation is probably a given. You know, in my conversations with several cabinet ministers on camera, the suggestion was that a farm loan waiver is a bad idea. Do you believe that maybe we could see a move towards some sort of a waiver, perhaps even interest-free loans, for instance, to revive the rural economy?
You know, I cannot ever support loan waivers because the moral hazard and risk that it then puts into the system is just dreadful. It's dreadful because somebody has to bear that cost, and you already have overburdened banks and a financial system which is clearly already under a lot of pain in terms of the NPAs. And then if you begin to go back to this whole political agenda of loan waivers, no matter how badly it's needed, what it does is it just destroys the ability of the system to give loans in future. So it's something that we should absolutely stay away from. But yes, helping in terms of interest rates, support therein, access to finance itself, which can be an issue. And don't forget, one of the big things that has happened because of demonetization is the microfinance sector, which has helped a lot of rural communities, is under a lot of stress. So just helping them get back on their feet to be able to oil the system to move ahead may be important. But I would hate to see these loan waivers, which are really very much part of a political agenda but cannot help the country in the long run.
Okay, so Mr. Uppal, you know, what are you betting on? Credit offtake continues to be anemic, private investment hasn't started. Beyond corporate tax cuts, what would the big ask be from the finance minister?
Well, I think I'm basically looking forward to having, increase in demand and consumption levels. And I think that is something which can happen if the government increases their own spend. I do agree that in the last 2 years, it's mainly government which has been spending. But it has had its own share of multiplier. For example, the kind of investment that we've seen in the road segment, the ports, bridges, and others. I think that has definitely created stimulus. But then the core sector is still not triggered. If at all there's any expansion investments coming, it's coming only through public sector, which perhaps are not the best thing to do and is going to greatly encumber the government. So I think somehow they have to motivate the private sector to put in more money. And we have to, you may ask, where do we start? I think we should start by putting more money in the investments in infrastructure because that's the prime mover. We have seen the positive impact of it and we just have to continue doing that. The second thing is the government has to take steps to make sure that the private sector becomes competitive. I'm very thankful to government that they've given all kind of support to the industry.
MIP, you mean
Yeah,
specifically?
MIP. Yeah. But, we can't live with these kinds of subventions. We have to stand firmly on our own feet. But that is where the government has to look at various steps whereby they make them more competitive. The things like the cost of freight. This time, interestingly, the railway
budget is going to be part of
has
the
got
union budget.
somewhat eclipsed.
Yes.
So we are not able to see the proposal so thoroughly as we used to do
But the
before.
health of the railway financials is dismal at this point in time. So do you expect any significant relief there?
Not quite. Although the railway minister has been very bold to take all kind of investment initiatives, thanks to him. But the operating ratio is still 96%.
Yeah.
And then they are running short on the passenger revenue as well as the freight revenue. So, but we still need to cut down on freight costs. Otherwise we will continue to look after them. I always say then it's easier to, it's cheaper to bring a ton of steel from Shanghai to Bombay than from Odisha to Bombay.
Okay, so Gokul, finally, what will it take for the government to motivate Mr. Uppal to put some money back into the economy?
I think to bring back manufacturing in core sectors, as well as into the FMCG sector. I think bringing back jobs is an important theme, as you talked about. We have to get the manufacturing sector rolling, and GST is a very important part of it. The second part is a corporate tax and the MAT cut, which is required. The third piece is, of course, I think this government needs to pay a little more attention on the FTAs. We've already seen a new set of trade wars going to break out.
Yeah.
And it will be interesting to know whether the government has a positioning as to how India is going to be.
It wants to capitalize on trade, yes. Absolutely, but nasty surprises, the buzz picking up once again of long-term capital gains. Outside of that, which in a sense the market is perhaps bracing itself for, what could be the ugly, nasty surprises?
Yeah, well, one nasty surprise could be what you mentioned about. I hope it is speculative. I think, what's required really is a degree of stability. So I think there's high level of expectation on corporate tax cut rates. So I think if the cuts are not material, then I think that could be a nasty, surprise, because if he has to come down to 25% in 2 years, people will expect at least 2.5% reduction. Because I think that would
Politically, you think the climate is conducive for him to announce a 2.5% reduction in corporate taxes?
There's no magic wand, but I personally feel that the bonanza action that he will experience on the personal tax side is going to help him take forward the momentum next year as well. So it is a safe bet that you can take by reducing the corporate tax. The second is the whole debate on ease of doing business. So I think there's a lot on his table on the tax administrative agenda, because I think if you improve the tax administration, your tax collections are merely going to look up. So I don't think, and also at the end of the day, where does India land itself in? With 34% tax rates and almost 20% dividend distribution tax rate, it's just puts us in a basket of countries of the most uncompetitive country.
Nena, I'll give you the final word in exactly 10 seconds. Do you hope that this government will also be outward looking, i.e. it takes into cognizance the big global reset as Gokul was talking about?
I think we have to see India as competitive, as a place which continues to really benefit from FDI, and it doesn't happen when you have a world out there that's reducing taxes, and the US is clearly on that path. So it's going to be important for us to look at what's happening there. We know exports cannot drive our growth easily, so it has to be about domestic investment, domestic growth, and encouraging foreign capital to come in here. So looking at what is happening outside is going to be very critical as we chart our course. And the one sector that didn't get mentioned was the whole area of affordable housing. I think therein government can lead very, very well, because by acquiring land, allocating it, and giving housing a kickstart can certainly generate growth in other sectors and give some employment opportunities as well.
Absolutely right. Affordable housing is likely to be one of the key themes of this budget. They're likely to expand the Pradhan Mantri the Pradhan Mantri Awas Yojana now to even include Tier 2 and Tier 3 cities. That is our understanding. So jobs, 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 digital payments push, rural revival, indirect tax dilemma, the big tax push, at least as far as personal income taxes are concerned, and an infrastructure push, which could include things like affordable housing. That's what you need to watch out for when Finance Minister Arun Jaitley presents his budget. We'll, of course, be analysing it for you with the same cast of characters. For now, thank you very much for joining us on the BMR Budget Big Picture. We're back with you on the 1st of February to decode and analyse the budget. Thanks for watching.